I'm curious where you think the consumer is going now, facing all of these shocks, all of this uncertainty, higher gas prices. What does that tell you about where they're going to be wanting to spend their money?
There's a whole new list of things on the macro level that are impacting us today, and we're talking about the economy. And the last 2 years has been probably the unprecedented time of change and disruption. So this consumer has really been through a lot the last couple of years, and I think as much as anything, it's been demonstrated that they're resilient. People are resilient. Consumers are resilient. We definitely have had kind of higher savings rate, lower spending during this time period, and sentiment kind of fluctuating and going up, and in the most recent period, down again. So here we are back on another leg of the roller coaster. And I think that, as we entered this year, I really was looking forward to seeing what are the new norms people are establishing. And that's where we're trying to keep our focus on, which is out of this period, what is kind of re-emerging like. It's not going back to where we were before. It's obviously not being where we've been for the last 2 years, but it's really thinking about what does the future look like and how are people going to be impacted by the recent events going forward. Now you throw in
a war,
you throw in inflation, you throw in interest rate increases, and that's just a lot of uncertainty. And you're seeing that show up in lower consumer sentiment and consumer confidence numbers.
So what does that mean for the next leg of the roller coaster and where you are going to be putting your money? Because your job is to figure out those early bets that none of us don't see.
So we've been investing, and we've been looking at a consumer who's been cautious for the last 2 years. Savings rates have been higher and spending has been lower. They've been more particular about what they're buying, when they're buying, how they're buying, just like they are with their time. I think that continues. If we thought this year was going to be the year to reemerge and for everything to kind of come back on, I think now you've got a whole other host of reasons for people to be a bit cautious. That being said, people are really healthy. Mm-hmm. This is, some of that where we had higher savings rates, definitely over the last 2 years than we've had in decades. While spending has started to tick back up, savings rates are still higher. The job market is incredibly favorable to people looking for jobs. So there's kind of a counterbalance to some of the things that feel threatening out there. And I think you just see people proceed with caution, but also feeling like they want to get out and spend a little bit more, get out and do things again.
What's happening in the venture capital environment? Because there has been a ton of money flooding into the ecosystem, and valuations have been high. I'm hearing that valuations are starting to come down, given this uncertainty. What are you seeing?
That is the hearing. I don't know how many people have seen it yet, but I think it seems like the practical or the expected thing to have happen.
Yeah.
I think everybody's life has been different for the last 2 years. We talked about the consumer's life being different for the last couple of years. Investors have been too. I think we went home on March 20th of 2020 and thought we can't do our jobs because it's such an in-person type of job, and we learned how to do that in a remote environment. Last year was a record year for investing in the venture ecosystem. It was almost or more than 2x the year before. And so it was just people at work, focused, and just cranking out, making new investments. And so I think this year, end of this year, you have a lot of new investments to navigate in an uncertain environment. It's a good time to sort of take a pause, make sure people are set up for success, think about how you are going to set priorities for this year in the changing landscape. And things were frothy last year on a lot of levels. It's never all across the board. I mean, there's a lot of innovation and there's a lot of newness driving opportunity. But the pause moment does give people a chance to kind of reset a little bit, and I think that that's probably healthy. Mm-hmm. It's healthy for everybody. It's healthy for the ecosystem in general. But it's more of a conversation right now, and sort of how do we expect that to play out than it is, I think, actual deal pricing.
You've now raised over $1 billion
in our last fund,
and you are celebrating the 10-year anniversary of Forerunner Ventures.
Yes.
What is the next 10 years going to look like? How do you put those hundreds of millions of dollars to work?
Yeah, I actually, I feel so invigorated to be entering this next decade with 10 years of experience working together as a team, and still being as excited about what we do and as ambitious in the face of a tremendous amount of opportunity. So, you've been covering the tech industry for a couple of decades. I've been investing in it, but in so many ways, like, it is at a place now where it is ubiquitous. It is part of not just business, but people's lives, and we're really seeing a lot of more useful cases for it and really shaping people's lives in different ways. I think this happened because of technology, because of connectivity, and it was sort of catapulted forward, I think, in the face of the pandemic, which is this idea of, like, I want to be more self-reliant. I want to take more things into my own hands. Maybe I want more flexibility in my life. So people are changing their career paths, or they're changing how they make money or how they seek opportunity. And that is fueling, like, a whole new landscape of potential across the board. And that's also shifting how people are spending money. So I think there's just a lot of opportunity happening. I think there's more conversation about sustainability, about kind of like how to do good in business for the future. There's obviously a lot of conversation about Web3 or crypto and how that's going to influence things. So I think, our team feels definitely like we're entering this year executing into a tremendous amount of opportunity and change.
What are you most excited about when it comes to crypto and Web3? A lot of people still don't understand it.
Yeah, I mean, I think we're all on a really steep learning curve. We have made some early investments. I think the area where we're focusing the most on is how do we think about making it something that's more approachable and more kind of, practical to people and to business, so that it's not just a kind of a subsector of the economy. It's like, okay, it's a new protocol, it's a new way of doing things. It'll allow different kinds of access. How do we think about leveraging that in the context of what we're already doing? So does it make business transactions easier? Does it change kind of some of the goods you buy? Does it change how you interact in some ways? And so really thinking about how do you make that an approachable experience.
Now, one thing that is not changing fast enough is the representation of women in the tech industry.
Yes.
And the latest number is this 2% that keeps getting thrown around. 2% of venture capital funding last year went to women-only teams. It's like 17% when you look at mixed gender teams, but that still means more than 80% of venture capital is going to only male entrepreneurs. Why isn't it changing faster? What's going on?
It's incredibly disappointing and frustrating, particularly because that is a downtick from the year before, and that's just unacceptable on all kinds of levels. I do think on the positive side, you have 12% of women, 12% of partners at venture firms are women. That's up from 2% a few years ago. Women-led firms raised $7 billion last year. That's up substantially from any year in the past. And I sincerely hope and believe that, like, that changing landscape is going to flow through to a more diverse group of founders being funded, and I don't want to get hung up on one year as a trend or as we can't accept that, right? And so last year, let's call it an anomaly, and this year, let's say that the inputs are going to drive better output, because it is so obvious and clear when you look at results that multi-gendered, multi-ethnic teams are better company cultures. And after having invested in 150 plus companies, private companies over the last decade, we could definitely say that one of the biggest indicators, if not the biggest indicator between a company that does well versus a company that does really well, is the culture that they build.
Really?
Yes, it's the ability to get the right people engaged and to give them the right opportunity to flourish and do their best work.